Hello and welcome back to Money Moves Daily, your Eurozone Report. It's Wednesday, September 3rd, 2025. I'm Sophia Reyes.
And I'm Jason Miller. Sophia, it's been a turbulent start to the week across Europe. The German DAX is notably down this morning, reflecting a broader unease that seems to be rippling through the markets.
Indeed, Jason. That unease is largely driven by a significant update on Eurozone inflation. We saw the headline Harmonized Index of Consumer Prices, or HICP, rise to 2.1% in August, up from 2% in July. This is a critical development, particularly after German HICP surprised to the upside, coming in at 2.1% year-on-year. This uptake challenges the European Central Bank's narrative and has the markets rethinking their wait-and-see approach.
Okay, 2.1%, that sounds like it's barely above the ECB's 2% target. But for the average person in Berlin or Paris, what does this slight increase actually mean? Are we back to square one with rising prices after what felt like an eternity of inflation?
It's a nuanced situation, Jason. While 2.1% is close to the target, the surprise on the upside, particularly from Germany, is what caught analysts off guard. This data point, combined with earlier signals of sluggish economic growth in the region, puts the ECB in a challenging position. Their previous stance was to keep rates steady at 2% after a series of cuts, awaiting more clarity, especially on trade negotiations. But now, with inflation nudging up, particularly driven by base effects in energy and goods and strong food prices in Germany, it could limit their flexibility for any future easing. The market reaction, with the DAX slumping, reflects concerns about rising risks and interest rates.
So the very data they said they were dependent on is now complicating things. It feels like they're constantly playing catch-up. Speaking of complications, let's talk about France. I'm seeing headlines about political turmoil impacting markets there. What's going on?
You're right to bring that up, Jason. European equities have taken a hit, partly due to political uncertainty in France. Prime Minister Bayrou has called for a confidence vote on September 8th related to his deficit-cutting budget proposals. This kind of political instability can quickly translate into market jitters, especially for a core Eurozone economy like France. The CAC 40 has seen declines alongside other major European indices.
A confidence vote over budget cuts. Sounds like classic Brussels-style bureaucracy making people nervous. For a small business owner in Lyon, does this mean higher taxes, less government support, or just more general uncertainty they have to contend with?
Precisely. It creates a climate of uncertainty. Businesses thrive on predictability, and when there's a question mark over the government's ability to pass its budget or even maintain power, investment decisions can be put on hold. It can lead to a tightening of financial conditions as investors shy away from perceived political risk, impacting everything from borrowing costs to consumer confidence.
All right, let's speed things up with a few quick hits from around the Eurozone. Sophia, what else is moving the needle today?
First up, some positive news on the trade front. It appears the odds of further monetary loosening from the ECB have faded, partly due to advancements in the EU-US trade agreement. This suggests some resolution on a key geopolitical issue that had previously weighed on economic outlooks.
Good to hear some progress there. Less friction, more trade, that's always a win. What's next?
On the employment front, the euro area labor market figures are expected to show the unemployment rate holding steady at 6.2%. While not a decrease, it indicates a degree of stability in a challenging economic environment.
Steady unemployment is better than rising, I suppose. And finally, any notable corporate news?
Yes, from Germany, PVA Tepla, a technology group, saw its stock slunk today despite confirming its midterm targets at a recent capital markets day. This comes after its share price had doubled earlier this year, indicating some profit-taking or investor reevaluation.
Interesting. Even good news can sometimes lead to a correction after such strong performance. Markets truly are a complex beast.
Absolutely, Jason. And looking ahead, we have more data releases that could offer further clues for the ECB and the markets.
What should we be keeping our eyes on for the next 24 to 48 hours?
Tomorrow, Thursday, September 4th, Eurostat will release the industrial import prices for July 2025. This data point, while seemingly granular, provides important insights into cost pressures faced by European industries and could, in turn, influence the overall inflation outlook.
So, another piece of the inflation puzzle. How much attention will markets really pay to something like import prices, especially with the bigger inflation number just out?
It feeds into the bigger picture. If import prices show continued upward pressure, it reinforces concerns about inflation becoming embedded, making the ECB's job of bringing inflation sustainably back to 2% more challenging. Conversely, a moderation could provide some much-needed breathing room. It will certainly be watched closely by analysts trying to forecast the ECB's next move.
So, a day of rising inflation, political drama in France, and a close eye on incoming price data. It certainly feels like the Eurozone is navigating some choppy waters right now.
Indeed, the delicate balance between taming inflation and supporting growth remains the ECB's primary challenge, and this week's data only underscores that.
That's all the time we have for today's Money Moves Daily, the Eurozone Report. Thank you, Sophia, for breaking down these complex issues.
My pleasure, Jason.
And thank you for tuning in. Make sure to subscribe and share this podcast with anyone looking to understand the forces shaping Europe's financial landscape. We'll be back tomorrow.